and that will then be put up on the AIC's website. There'll be links to YouTube. Any slides that are shown will also be put up, and we've also got a brochure which we'll put up onto the website as well. Speakers will present for about 8 to 10 minutes. Q&A, please, will happen at the end of the last speaker. So once Mark Brownbridge has finished, then we can take Q&A. And can you do the Q&A, please? Any questions in the chat rather than in the Q&A chat? So straight into the direct chat, and we'll do our best to pick that up and answer it as we go. The outcome for the day then, or for the morning, for the hour really, is that all participants understand where the AIC fits, what it does, and how we're going to aim to do it. Your role as attendees and participants really is to help us, to get us out there if we can, and for you to understand how we can help you, how we can help any of your investors, and how we can help any potential firms and potential growth firms and startups get the best out of what it is that we can offer. So on that then, and with that as an introduction, I'll hand over to Stella, please, if you wouldn't mind taking us through the start. Thank you.
I'd be delighted. Thank you so much for your kind introduction, Mark. And yeah, I am really privileged to be here today making this presentation to you as the AIC is enjoying its formal launch. My part of it is setting the context really about the UK Islamic financial landscape, bringing us through from the start almost, well, absolutely up to today. So I'll be delighted to do that. So to give you that context, well, the UK has come to enjoy the largest share of trading in many international financial sectors, and that includes foreign exchange, cross-border bank lending, and also international insurance premium income. Here in the UK, we're Europe's management of funds and private wealth, as well as for insurance and also legal and professional advisory services, which has been very important to this industry. Our financial predominance also enables us to serve all aspects of Islamic financial sector requirements. It's evidenced variously, but not least, by the number of UK-based financial institutions that have been approved to date by the UK financial regulator to offer services. And we have far more that have been authorised than any other Western nation. Now, one reason that here in the UK we've achieved such prominence in Islamic finance is because of supportive government policy. And I'll be the first to dig them in the ribs when I think they're not working quickly enough to support our ambition. But the UK has actually been amongst those who have sought to create a level playing field for Islamic and conventional financiers through its endeavours to ensure that nothing in terms of financial legislation or regulation prohibits the availability of Islamic financial products and offerings. So if we look to the origins of that UK government engagement, it takes us all the way back to 2001. Motivated by an agenda then of financial inclusion, the Bank of England convened a working party to investigate the barriers to development of Islamic financial services in the UK. That was actually chaired by the late Governor, Lord George. And I did some work around that group a long time ago now, but the findings concluded that UK financial regulation didn't actually preclude Islamic banking and financial products, but aspects of UK tax legislation were extremely prohibitive. And as a consequence, a revision of tax legislation started to try and create that level playing field that I referred to. And that started with the Finance Act 2003, and provision was made to remove the double impact of stamp duty land tax on Islamic mortgages. And that actually paved the way for the launch of UK Islamic Bank, Islamic Bank of Britain, which is now known as our Ryan Bank, which was authorised in 2004. Since that time, there actually have been another 5 fully Sharia-compliant banks authorised to operate in the UK. And last year, the City UK estimated that total Sharia-compliant banking assets in the UK were moving up towards about £4.5 billion. London's financial infrastructure, and I'll start with London and then expand to the rest of the UK because Islamic finance isn't all about London, but London's financial infrastructure has always been important for developing Islamic financial services. Those who dialed in early will hear me talking endlessly about my career back to the 1980s, but I was working then at a UK merchant bank, structuring short-term trade and commodity investments for Islamic banks, utilising the trading environments of London's markets and exchanges, and in particular then the London Metal Exchange, which still has a role to play in our industry. Similarly, the London Stock Exchange has subsequently become a key venue for the issuance and listing of sukuk, which are described very simply as Sharia-compliant or Islamic bonds. And the total value of sukuk issued from that platform which now also lists a number of Sharia-compliant exchange traded funds, has grown from about 750 million in 2011 to about 9 billion at the end of 2018. So I mentioned the importance of ancillary professional services available in the UK because it really complements Islamic financial sector business development and origination. And London, again, is home to over 200 international law firms. At least 25 have established Islamic finance teams that will offer market coverage. But many smaller firms throughout the UK are also active in the sector. And historically, for reasons I don't have time to go into now, the overwhelming majority of Islamic banking contracts have actually been governed by English law. The UK's largest accounting, consulting and professional services firms all also have Islamic financial sector coverage. But now we're proud to have other UK homegrown originated firms such as IFAS, who have specialist focus on global Sharia compliant products and services. And let's not forget education either. The UK is the leading centre for Islamic finance education. A lot of people are surprised to hear that UK educational establishments provide over 80 relevant courses. And those are at universities and colleges throughout the UK, in no way centred in London. But here in London, through the Chartered Institute for Securities and Investment, we have something called the Islamic Finance Qualification, which it was my privilege to be one of the original authors of that back in 2004. This qualification is statistically supported as the most successful professional qualification in terms of uptake ever launched for Islamic financial market professionals and new entrants. That's still the case today. And so, in terms of ongoing government policy, sector strategy, the Islamic Finance Task Force was convened in March 2013. Quite a lot went on in between Al Rayyan being launched for Islamic Bank of Britain in 2004 and 2013, but time again doesn't permit today. But this task force that was launched in 2013 was convened by the government, overseen by 4 government ministers, and they invited 6 industry or market practitioners to join them, of which I was one. And we were asked to evaluate what was needed to enable Islamic financial activity to further develop here in the UK. The task force had a finite lifespan of 9 months, and we were leading up to the UK hosting the World Islamic Economic Forum. And we focused on capital markets and then aspects of regulation, education and communication that would need to progress and accelerate development. In a nutshell, the task force work led to the UK becoming the first nation outside of the Muslim majority world to issue a sovereign sukuk, which it did in the middle of 2014. And it was listed on the London Stock Exchange. It was quite small, only £200 million. There are reasons for that, but it was 11 times oversubscribed. And it really anchored the UK's credentials in the global Islamic financial world. So following that global first, the City UK, which is the representative body of UK-based financial services, has provided technical input and support to the government through its subsequent deliberations. City UK still does that. It is the mandated private sector partner of government, but of course it works very much in the wholesale and institutional space. And it has something called the Islamic Finance Market Advisory Group, which I've chaired since 2014. I've been proud to chair it, which with the executive at City UK and also membership from firms throughout London and the UK now who are interested in Islamic financial sector development, we respond to government consultation and help them to shape policy formation. So with further relevance to AIC's launch today, in 2018, the UK Islamic FinTech panel was established, and that was actually a direct response by firms in private sector to the growing momentum and development of entrepreneurial Islamic FinTech initiatives, as well as enabling FinTech infrastructure to be created to connect our expanding Islamic financial footprint. So not just between us here in the UK, but also our outreach into the global world. And it's been very successful. London's status as the global international finance, UK's global prominence in FinTech has helped to position us as a leading hub for Islamic FinTech. Islamic FinTech can benefit from the UK financial architecture that's in place and is continually evolving, and we make sure that we keep close and that we lobby government to make sure that there is a focus on our needs as an industry sector. But we can't be complacent here. We have huge competition. So equally importantly, when I'm speaking on behalf of City UK, we're keen to emphasise that the UK itself and the government has to recognise and nurture this very special sector, where on home soil we've got such an abundance of Islamic financial sector expertise, and we have this extraordinary entrepreneurial and visionary technology talent pipeline. So I think in summarising there, I've made it clear that the coexistence of so much Islamic financial sector capacity and capability within the UK has actually created significant benefit for the nation. It's made the UK an attractive destination for foreign direct investment, particularly from the GCC, from the Middle East and from Southeast Asia. And a lot of that historically has been deployed in real estate and to an extent in infrastructure development. But it's also serving now here to support the halal economy. And that encompasses Sharia-compliant firms, not just in financial services, but in fashion, in food, in pharmaceuticals. And many of those are injecting still greater momentum into our diverse and exciting new technology businesses. The problem for them is accessibility. How do they connect into those investment flows effectively and efficiently? So I think that the UK has been effective in demonstrating thought leadership and pioneering proactivity through its approach to sustainable and responsible financial practices, and let's say green with the broadest remit. But within Islamic finance, we've been deliberating recently about how we move beyond Sharia compliance to embody maximise al-Sharia, which I don't want to get too technical, I'll let IFAS do that, but I describe that as the objectives and purpose behind our compliance. And how do we embody that in our own practices? At the same time, leaders within our Islamic finance industry have been diligently exploring that nexus. Where does Islamic financial market disciplines and practices cross over and fit with those of other responsible and sustainable financial market subsets? Now, I'm a firm believer, I'm not a Muslim, but I'm a firm believer that Islamic finance has its own unique identity and an ethos that results from being a faith-based subset of responsible finance and investment. I'd never want that to change. But the call to action for firms to contribute to the wider positive impact is one that, in my opinion, we just can't afford to ignore it. So through the principles of maximise al-Sharia, Islamic banks and financial institutions have moved on beyond business activities that reflect solely the considerations of Sharia compliance. Those always have to prevail, I hope I've made that clear, but to those that encompass and reflect social and environmental positive impacts too. Responsible and sustainable financial practice is actually making its own transition now, as we know, through legislation and top-down policy from voluntary into mandatory approach. And I think there, because we are quite prescriptive in Islamic finance, we have a roadmap, we have our prohibitions, we have directions in which we know we prefer to move. But I think that could actually give us an advantage in the industry, because for us, that's a business necessity and it underpins the core governance of everything that we do. So just before I wrap up, just a little bit on DDCAP. We're a markets intermediary firm and our aspiration is to connect the global Islamic financial marketplace responsibly. I founded DDCAP with a colleague in 1998, and since then we've become a leading provider of asset facilitation services across a diverse range of Sharia compliant products and instruments, both in the primary and the secondary markets. And we've diversified our business. In recent years, we've become perhaps better known as a provider of automated financial system solutions, which support our offerings and our clients' requirements. And we have a platform called Ethos that does that. We've always aimed to be a first mover in our space and to lead by example. And we have a very evolved, sustainable and responsible actions program that we've been building over the last 5 years. And actually all of that has come from the work that we've done with our internal Sharia Supervisory Board and our Sharia governance pillar. So it's interesting. But we're committed to developing a more sustainable, equitable, prosperous world. And we support the view that those in business have to adopt strategies that don't just focus on delivering financial results, but also those positive social and environmental incomes that I spoke about before. So in tandem with what we've always done with our technology and our business offerings, we're now at DDCAP actively seeking to invest in halal economy businesses with exceptional fintech strategies, which is why this proposition that AIC is going to introduce today is very exciting. You know, one of the challenges for us has been in our due diligence and finding those connections, looking for the businesses that we want to invest in. And the reason that we're doing it is the outcome of the recognition we've made of that extraordinary entrepreneurial and visionary Sharia-based fintech talent that I spoke about a few minutes ago. We believe that the SMEs, the new businesses that are emerging in our space, as well as those within the wider halal economy, have the agility and therefore great potential to highlight their work, their product and their service development within that overwhelming global need for an approach that embodies sustainable and responsible practices. And we see connectivity to those businesses through us, whether it's by collaboration or direct investment, as a natural complement to DDCAP's own Sustainable Responsible Actions Programme and industry goals. So I think I've made it clear that we see that Angel Investors Club is amongst those firms that has shared values. It's setting out to be ethical and Sharia compliant as an investment platform for high growth companies across the UK. AIC is going to, well, Ali is going to tell you about exactly what AIC does. But as an investor, I think potentially this delivers some exciting accessibility that probably hasn't been necessarily available whether you're an institutional or an individual investor. So I'm also looking forward to hearing more this morning. Once again, I very much thank you for inviting me to speak to you and for putting up with me talking about this for the past 10 minutes. But I think it will be a very interesting morning and I look forward to being part of it. Thank you.
Stella, thank you very much for that. I couldn't have asked for a better introduction. It segues perfectly into what Ali is about to tell you now about the AIC. Ali, thank you.
Cheers, thank you. So Mark and I are co-founders. I have some slides to present. So Bismillah ar-Rahman ar-Rahim. So my name is Ali, and Mark is my co-founder. As he alluded to in the introduction, that over many coffees, feel like a distant memory now, that this idea was essentially born through our discussions, through frustration really. You know, why is it that certain types of people or so certain category of people often get left behind, but no fault of their own. So this is what was born out of it. So I'll start off with giving a bit of an overview of what we are and where we're heading. So essentially we're a blend of an online platform and professional services. By that, I mean investees and investors can browse online, list themselves, and then we do some hand-holding between the investors and the investee companies. I think we did explore the fully automated system, but we think that the economy, especially within Islamic finance and ethical investing, is just not quite ready yet until we've done all the educational piece and laid all the necessary foundations. So where did it actually stem from? So my background is tax, and I often advise both investors and investee companies on the UK venture capital schemes. And in the last 6 years, I could comfortably say that I have never advised a BAME investor who's looking to invest in SEIS or EIS schemes, never mind the Sharia element to it. And that could be purely because they're just not aware of the schemes and are just not educated enough to know that they can be used from a tax perspective and from a financial perspective as well, especially if they find the right companies who can become the next unicorn. In the last year or so, I have advised quite a few investee companies that are from BAME background, BAME founders. So that's a good thing, although it has taken a while for them to come through the process and essentially secure funding of any kind. So essentially that's what we're trying to do. We're just trying to, we're not trying to do anything fancy here. It's just educating the right kind of people and knowing that there could be a blend within the ethical space, Islamic finance, and the SEIS, EIS schemes, which are wholly champion and I think are very good schemes. And I'm sure Mark Brownridge of the EIS Association will tell you more about it at a later stage. So if you just dive straight into it, so I won't read all the slides line by line, and I'll share these slides with you later with a follow-up. But essentially what we're looking at is, a lack of investment platforms that give access to ethical and Sharia compliant startups, particularly around the SEIS model and EIS model. Don't get me wrong, there are other online platforms out there that focus solely on SEIS and EIS, which they do an excellent job of. But again, they have neglected a certain category of people or a particular type of finance. And which comes into the second point, BAME founders, or whether they're founders or investors, often don't have many options, particularly around Islamic finance and ethical investing. The third one and the fourth one often interlink with each other. Again, in my time advising investors in particular, they want to know more than just the financial information that comes out of private companies, which is very rare to get that hold of information. And which leads on to the final point that, if they are not aware of those needs and requirements that a startup wants, i.e. more than just capital, then the investors can't open those doors for those investee companies. And there's a final one that I haven't added in, but we often talk about, is a potential halfway house, not becoming the fully Sharia compliant business. That could be daunting in the first instance if they are not aware of the rules, especially for the investee companies and the investors, in particular with the timeline frame. There isn't a halfway house that incorporates the SRI, the ESG model, and the Islamic finance principles, and then having one centralized framework that the industry can have access to. So that's a potential problem too. Our purpose is quite simple, really. We bring together investors and businesses together under the ethical and Sharia umbrella, interacting with investors' faith and their beliefs, and matching them up with the co-founders that have very similar principles. Again, I won't read line by line, but on the left-hand side is the SRI model, and on the right-hand side of the screen is the Islamic finance model. But what I would say here is simply that Islamic finance equals ethical investing, and often people don't know that, and hence why it probably gets neglected, thinking that it's only reserved for a certain type of category of people, therefore it's not applicable to me. But in fact, if you strip away all the terminology and look at the framework, Islamic finance equals ethical investing. But sometimes it doesn't work the other way around. Ethical investing doesn't equal Islamic finance, because Islamic finance has a much stricter framework and a higher hurdle in terms of the again framework, and the requirements is a lot stricter. The solutions, again, quite simple. Where, as I said at the start, we're looking to be an online platform with a blend of investor relations piece, just so that we can manage that information between the investors and the investees, so that the more important thing is that the investee company and their survival rate it's enhanced. We all know that most of the startups fail within the 3 to 5 years, and that's one thing that we're trying to conquer at the same time as well. And another thing is that we want investors to be more involved with their investee companies, rather than just parking money and then looking for a good return. Yes, they could do that at the same time, but they could also offer their business consultancy services through various different roles, and enhance their investee company. And finally, we're looking to create our own framework, an ethical framework, which incorporates the SRI, the ESG, and the Islamic finance principles. And that's essentially a halfway house. So it won't be a full-blown Islamic finance screening or of any kind, or the certificate. But it'll still be a halfway house, but that can relate to both the Western values within the SRI and ESG, and also with the Islamic finance principles. The market opportunity, again, I won't go through it all, but what I would say is the global market is currently worth $2.4 trillion. So the scope is quite massive. And yeah, it's evident within itself. And something that Stella alluded to as well is that the UK is the leading Western center for Islamic finance. So where better to be and start a business, UK, right? So let's make the most of it. Future plans to establish a SCIS EIS fund that solely houses Sharia and ethical businesses, and help them, through the seed round and through the scale up process. Have a managed investor relations piece, whether it's through an app or through a desktop version. And essentially, the most important thing is not to alienate anyone, but to partner up with various different institutes and leverage their technologies, their client base, and give them that service that they want. And more importantly, the diversification that they want and need in their investment portfolios. And our business model is quite simple, really. And again, I won't go line by line, but the Islamic finance funding model should be no more expensive than your traditional Western funding model. So at the moment, SEIS, EIS funding ranges anything between 5 to 15% commission. So we're somewhere on the bottom end at 6% of any funds raised. And again, we'll have anyone pretty much from seed round through Series A and beyond. But the idea is to retain that relationship both with the investee and with the investors, so that we can help them on their journey. Mark and I, as I said, we're both co-founders, but I would like to give credit to the board members that we have. They've been real instrumental in helping us get to where we are today, with their investment, with their consultancy, and mentoring us is the most important thing, and help shaping our vision and what we actually need and want from our project, and defining that, refining it as we go along. So we could all really grateful for them. Thank you for that. Next action, simple. We're in the process now of signing up investee companies, and if you're an investor as well, we're also onboarding you, so both investee and investor end. Then let's have a chat. But there's our details. But the main thing that I would say here is, just to summarize, is we're not just an ordinary investment platform. A company cannot just list themselves here. You have to sign up to our ethical framework, whether it's Sharia compliant or not. The other spectrum, if you want to be Sharia compliant, then you have to sign up to that framework as well. So it's one or the other. So, but yeah, that's it from me, and hopefully that made sense. And thank you. Back to Mark.
Ali, thank you very much for that. I think just from my perspective, not trying to eat your sandwiches of your presentation, but I think the beauty of this is the whole fact that it's simple. It really is a simple idea, and I think the simple ideas are the ones that take off, and the ones that work the best. It's a simple proposition. It's a simple solution for both investors and investee companies, and it's within a huge and growing market. The only other point I'd want to make really is the one that Ali's already made about the board. The support that we've had from the board has been absolutely astronomical, but not only the support that we've had from the board, but I think what we've been really careful to do is to try and develop a board that has got a real depth and breadth of expertise in this area and knowledge, in order to set us up for the best chances of success. I'll hand over now to Najib of IFAS, please, for Najib.
Thank you very much, Mark. Bismillah ar-Rahman ar-Rahim, wa salatu wa salamu ala Sayyidina Muhammad wa ala alihi wa sahbihi ajma'in. Assalamu alaikum, everyone. A very good morning, ladies and gentlemen. Hope you are keeping well and safe during these uncertain and very challenging time. Yet, we're still having these, impactful initiatives coming out to the light during these tough times. So if that sends one message, then there's definitely hope in seeing things much better, and hope in opening new opportunities for everyone. That takes me to the first part of my discussion, and the first one I would like to shed some light on is Islamic finance or Sharia compliant business. I mean, we've been talking about this for some time. A lot of people know, some of the participants are well versed in the Islamic finance industry and the Sharia compliance business, but many are not. So I'd like to give a quick overview of, the key principles of the Islamic finance industry or the Sharia compliance business, and what makes it different from the typical financial services or typical businesses. So as the word say, Islamic finance, assuming that more or less all of us have some background in finance and business, but we want to talk about what does Sharia mean? What is the implication of saying this is a Sharia compliant business or this is a Sharia compliant financial facility? So the most famous one is, of course, the prohibition of riba. Riba is the Arabic word loosely translated as our modern day interest. Right? So the rationale behind this prohibition, of course, is a very complex topic discussed by scholars and economists for centuries. And it's actually one of the shared values between the Abrahamic religions, the Christianity and Judaism. So that's the first element. The second element is the prohibition of excessive uncertainty and gambling. So referred in Arabic as gharar and maisir. So this is the type of activities that may create disputes in the society. This is the type of activities that you have a high chance of, a win-lose situation. This is the type of activity that usually detrimental to one party and on the expense of the other. Now, when we have these two, prohibitions together, that creates a need for, if you can't really create money just from simply having money, it creates a need to go back to the real economy, to have asset-backed type of financial transaction, asset-backed type of activities, services, selling, leasing, things that all of us do. We don't call it Sharia compliant, but then these things have to be basically creating these returns for the investors. So prohibition of interest, prohibition of excessive uncertainty and gambling, that creates the need of the asset-backed or real economy type of activities. And when you have that link with the real economy, then you create more kind of a participative and risk-sharing, system. And that's the fourth, if you want, pillar. And all these transactions are governed by an ethical framework. So that ethical framework, as Ali rightly mentioned, it encompasses, at least in theory, all the ethical values that we can see nowadays. So encouragement of transparency, encouragement of more disclosures, integrity, avoiding any activities that can be detrimental to society, detrimental to the environment. So all of this is actually encouraged and required by Sharia. In addition to a specific set of requirements in Sharia, things like, for instance, the prohibition of interest, things like, not financing businesses that are active in alcoholic activities. Of course, there are a lot of statistics about the impact of alcohol on society and so on. So this is in a nutshell, just a quick overview of Islamic finance. Now, I would like now to move to the second part, which is how we will work with AIC to create that Sharia governance and compliance framework. Just like in corporate governance, where you have a system that create this reasonable level of assurance that the institution is achieving its objectives, we also will create that Sharia governance and compliance framework that will provide this reasonable level of assurance to the investors, to the investee companies, and to other stakeholders of AIC that things are being done in a Sharia compliant way. And when you have that tick box next to a company saying this is listed as Sharia compliant on our platform, there is a whole system behind it. Now, when we talk about Sharia, I think many of you may ask the question, that we heard that there's different interpretation, things may not different between different jurisdictions, sometimes different school of thoughts in the Islamic theology. And this is particularly why in our work with AIC and a similar type of initiatives, we refer to the Sharia standards of an institution called IOFI, an abbreviation for the Accounting and Auditing Organization for Islamic Financial Institutions. So this institution is based in Bahrain. It's a not-for-profit institution, issues standards on Sharia governance, auditing, and accounting. They have a Sharia board, I think around 20 or 25 Sharia scholars representing, various different jurisdictions, Muslim and non-Muslim majority countries, coming from different schools of thought of Sharia to discuss and agree on standards for the industry to follow. And these standards, particularly the Sharia standards, have been very successful. They have been adopted in a number of jurisdictions, including Bahrain and the UAE, and they are considered outside, some jurisdiction, it's not a regulatory requirement, they are considered as a best practice, particularly in the UK, especially in the banking sector. So that reference help us in our work in that Sharia governance framework to ensure that acceptability for different type of investors and investee companies. Now, we structured this system to have multiple stages, particularly 4 stages, to ensure that, end-to-end compliance. The first one will be the initial screening. That initial screening will be done by AIC team. We'll work with them to have a simple guidelines that they will do the initial screening to see whether this company is qualified for the next stage. Now, the next stage will be the vetting, the Sharia vetting. So let's say a company, investee company, passes the initial criteria, they will be passed into IFAS team, who will be composed of certified Sharia advisors and auditors by IOFI, to make sure that these individuals have the qualification and the knowledge of these standards, and they will do the vetting. And this vetting will basically include, a number of qualitative and quantitative criteria. I won't go to the details, but as Ali mentioned in the presentation, we will look at the line of the business of the institution, the lines of income as well, what type of activities they are providing. We will look at their, involvement in Sharia and compliant activities. It will be kind of a bespoke, approval for each and every investee company. Now, once they get this initial approval, as they are at that point of time, they will be listed as Sharia compliant. And then there will be stage 3, where we will provide ongoing support as and when required, when they have inquiries and questions in their own operations and want to ensure that what they are doing is Sharia compliant. And finally, at the end of every financial year for each investee company, we will conduct an annual Sharia audit. So basically, if you think of audit in general, it's an independent verification to double check or to verify that the defined criteria at the outset has been complied with during a given year or a financial period. So if we look at these 4 stages together, from the initial screening, the vetting, the ongoing support and audit, that ensures an ongoing cycle of Sharia compliance and ensure that, every company that will accept to be listed as Sharia compliant, that want to be listed as Sharia compliant, are, legally, ethically, and, they have that fiduciary responsibility to comply with these defined criteria, from point A to point Z. So now, one of the most common question is, so who is responsible for Sharia compliance? Okay, we have an idea about the system that you will put in place, about the multiple stages that you will have, but who is responsible for Sharia compliance? It's the Angel Investors Club, right? No. It's IFAS, the Sharia advisors, right? No. So eventually, it's the responsibility of these investee companies, right? So if AIC provides the platform, the Sharia advisor provide the guidance, the criteria, the support, and the independent verification. But the ultimate responsibility for ensuring Sharia compliance lies with the management of the institution, who would like to be listed as Sharia compliant. It's just like, in normal financial audit, the institution has to comply with the relevant laws and regulations, and the auditor will come and give a reasonable assurance. And that's exactly how it will work in Sharia compliance. So each party has their own responsibility, but the ultimate responsibility of ensuring Sharia compliance, it lies with the investee companies who would like, to be listed as Sharia compliant, who would like to be referred to as a Sharia compliant business. So that's pretty much my, discussion and points I wanted to refer. Thank you very much for your time, and I wish all the best to AIC team for this impact-driven initiative. I think the last time there was something close a little bit to this type of initiative 5 or 6 years ago. So I'm hoping this one will last, and this one will have an impact on the UK society and Muslims at large and non-Muslims as well. Thank you very much.
Najib, thank you ever so much for that. It was a clear and comprehensive overview. Thank you. And we're, as AIC, are absolutely delighted to be partnering with IFAS now and into the future. And certainly we too think that this will be the successful one. Thank you. Hand over now to Matthew, please.
Oh, yes. Hi, everyone. Yeah, good morning. I do have some slides, so I will start a screen share. This will, I think this is going to work. Are those slides visible? Mark, could you just confirm?
Yeah, I can see those. They're visible.
Okay,
thank you.
Yeah, thank you for that. Okay, so yeah, so I'm one of the directors at Ethical Screening. As you can probably guess from the name of our company, what our role is with the AIC. So yeah, there's clearly some sort of ethical ethical screening required on the companies that are being looked at. Yeah, of my slides, we'll give a quick introduction to the company, as we are one of the sort of smaller research providers. So I'll just run through that, and then I've got a bit of information on how the market's developing and how that relates to Sharia, just things that are going on. So I'll crack on with that, just sort of conscious of the time. So we're a Cheltenham-based firm with remote working. We do have staff in London and Bristol, and one in Cornwall now. So our origins are in 1988. So we're one of the longer established ethical research companies. Slow and sort of steady growth is our aim. So we now have 12 people, quite a highly qualified team, mostly researchers, and pretty much solely focused on the responsible investment research side of things. I've got a slide on terminology, which I always put into whenever I'm speaking. So we'll do a little bit on terms. What does responsible mean, etc., and ethical. The people we work with, it's quite a broad spectrum: investment managers, some quite well-known names, some of the investment funds, a good one, Lion Trust Sustainable Future Range. It's quite a big a couple of billion invested in sustainable funds there, so we provide some of the screening to those. And the third kind of tranche to the business is working with charities and doing more bespoke work, which I think is where what we're talking about here, where the AIC fits in. So again, some quite well-known names, RSPCA, and this week sending some reports to Amnesty. That's a new thing. So yeah, some quite well-known names there. The majority of what we do does relate to larger listed companies, sort of all the big ones you've heard of, the Apples and Microsofts and BPs. But we do look at smaller companies, and our methods can be well applied to those. We've quite a lot of AIM stocks. I mean, they're clearly listed, different reporting rules, but they have their own nuances, and we have done some work against startups, particularly financials and some of the sort of renewable energy companies for investment funds and other uses. So yeah, that's a short introduction to what we do. Yeah, just wanted to run through sort of what's happening in the market, because I'm talking about the sort of maybe the non-Sharia side. So I think I would imagine most people are kind of aware of the first point there. There's just a continued increase in the amount of money that's being invested responsibly. I didn't add sort of stats to this, because it depends what you define as responsible, whether you're talking about ESG and what you're looking at, collectives or direct investments, etc. But it's particularly the last 2 years and 5 years, a massive growth in particularly what's being termed ESG investing. Number of reasons for that. I've put a couple on there. I mean, one of the main drivers is increasing set of standards and moves towards regulation. I think Stella sort of mentioned that earlier on, this sort of regulatory drive. Much of that is being EU driven with their action plan on sustainable finance. Other things just to mention, people may have heard of the Task Force on Climate Related Financial Disclosure, a bit of a mouthful, TCFD. Some of the implementation of this into MiFID II, where this is sort of more happening at the moment. ESG becoming part of the suitability process for, and this is for investment managers and advisors. So so much of that relates to listed companies, so not so much the sort of smaller private companies and startups, but it's all relevant because this is these are things that start to drive things. These things get in the financial press and the media. It's hard to look on even mainstream financial websites without seeing ESG, or they have an ESG section. Yeah, and I think it's all relevant, and it also drives the awareness and the demand from consumers as well. So it's all sort of linked in. And I suppose everyone's aware of general media, you know, climate change is right in the news. So all of these things driving this increase in the interest in, and people wanting their money invested more responsibly. Off the back of that, as you imagine, again, it's sort of listed companies, but launches of responsible investment funds, and particularly passive funds. I think there are 52 launches so far in 2020, and in the US it's running about sort of 30 fund launches a year that are classified as sustainable or ESG. So there's a lot going on, I think, is the message there. If I move on to, I've already used a lot of terms, so I, like I said, whenever I talk about, well, sort of almost to anyone, I guess, I have a slide on terminology just to sort of clarify what we're all talking about. The problem is, so a lot of these terms can be used interchangeably, so which doesn't help us. But this is our sort of view on what it all means. So when I talk about responsible investment, I think that's a sort of overarching term for I mean, it's been mentioned before that Sharia is a sort of ethical. Some aspects of ethical can be Sharia, but both of those are a way of investing more responsibly. ESG is part of the responsible investment sort of framework. So we say ethical. It's probably the most obvious one. That this is negative screening. It's avoiding things with portfolios based on can be personal beliefs. It can just be because you don't like an activity. If it's your money, you can decide how it's going to be invested. So it's about non-financial reasons. And although things have moved on a lot from that, it's still a core part of responsible investment portfolios. It's really the starting point, so it shouldn't be ignored in any way. And new issues arise. So a couple of these, cannabis is one that's sort of on the radar now. As it is possible to invest in such companies. Not in all countries, quite complicated, but and something like the sort of human rights situation in China as well is a sort of emerging issue, not least the sort of the treatment of the Muslim population there. So particularly as so much product is sourced from China, these issues on the radar. So ESG, when we're talking ESG, I don't know if everyone's probably aware that's environment, social and governance. This is more of a balance. We'll be looking at how the company carries out its processes, how it makes its products. So there's a positive and negative element, but a lot of it's looking at the positive things companies are doing in their processes to sort of improve things, make things more responsible. Our assessment, and a lot of assessments on this are indicator driven, so looking at a particular company. There's key factors that can be looked at and assessed in your particular rating scoring companies. Tends to be a more numeric analysis and using more metrics than the ethical, which is more purely based on non-financial reasoning. And then probably the most complicated term, sustainable. This is used interchangeably. We're sort of using this more as for the term impact stocks, so where you're investing in a company for more positive reasons. It's going after a particular activity. Renewable energy is probably the most straightforward one to describe. So you're investing in that because, well, it is viewed as a positive thing. I won't go, it's not enough time to go into the UN Sustainable Development Goals, but there's quite a lot of reporting around those. If people are familiar with those companies reporting to those goals in a positive way. So these are one of them is health related targets. So any company sort of in healthcare and pharmaceutical related activity can justifiably claim that they're meeting one of these sustainable development goals. It's quite a nice way of reporting impact. So that's my sort of run through of, I call it sort of developments in terminology. It's sort of settling down, I think, into these kind of 3 areas. And so, I have a slide on sort of where Sharia fit in. I think this has been covered understandably, so I'll sort of quickly run through that. But I mean, as ethical screening analyses to a sort of standard set of ethical criteria, if you were our client filling in the questionnaire, there's over 70 questions on there, grouped into about 16 areas. So some of these areas are the ones that overlap, sort of as we've already heard, with the Sharia provisions or prohibitions. The obvious ones: alcohol, gambling, tobacco, armaments. So these can get sort of quite nuanced. What do you mean by armaments? Is it weapons? Is it components of weapons? Is it companies that supply sort of even the food to soldiers, shall we say, or the barracks? So it might look like a simple ethical criteria, but a lot of these aren't necessarily. But yeah, it's just a state. Yeah, but sort of restate those overlaps with what's ethical and Sharia. Some of the animal welfare criteria also overlap quite well. What ethical screening doesn't look at, which is where IFAS clearly comes in, are the more sort of nuanced aspects around finance. So we don't pretend to do that. We never have. As a company, we do get asked whether we can do Sharia-compliant screening quite often, and we simply say that aside from these criteria that are overlapping, we claim to do the Sharia element. So that's clearly why we need the IFAS input and our input here, I think. Other aspects here on my the terminology, the ESG and the sustainability side. Also heard that they are they're also relevant, I think, to what's happening with looking at a holistic view of what the company is doing is also important now. Transparency. I mean, I was taking notes straight from the AIC website around social justice, accountability, fairness, and transparency. Those are sort of often covered within an ESG assessment. So yeah, good overlaps there. And yeah, my last notes, got an interesting image on here, which is, I don't know how well you can see that, was clearly taken pre-corona. Couldn't get much closer together that one, those people. Slightly random image, but yes, there's a slide on just notes on researching smaller companies, some of the nuances there. Clearly, the reporting rules can be different or are quite different depending on whether they're listed or not. Some areas, such as governance requirements, are less well defined, and this raises the issue of information availability, which I'll come on to later. But some of the company reporting that you might expect might just not be there. So it's how you get around that. My third point there, the ESG scoring rating. I think this is quite an important one because if you are rating a company, much depends on the information they are making publicly available. Some companies are very good at they're ticking the boxes. So if you've got a large listed company, well resourced, they have an ESG, or their investor relations department has a number of staff, and they're very good at putting together the reports that, if you're a researcher, it'll tell you what you're looking for. So if your ESG assessment is based around looking for indicators, some of the larger companies find it they don't find it easy, but it can be easier for them to get a higher rating. And it's difficult for smaller companies that aren't so well resourced, and they don't have so many ways that they can make these positive impacts. So you need to take this into account when you're comparing and scoring companies. So the ways to do that, I mean, we sort of weight the score, or you can skew the score for smaller companies, and you can also weight the positive activity the company has. So a smaller company tends to be much more focused. It might be a single activity, so if that activity is well focused, then you can score that more or rate it more highly. So the ultimate sort of example of this is probably companies like British American Tobacco, where if you looked at it as an ESG company, it is genuinely very good. Treatment of workers, etc. It will tend to score very highly on these kind of assessments. But if you you don't want to ignore the negative side of the product there. Yeah, so it's about, as a research company, taking all these factors into account. Yeah, the final point there on smaller companies, I mentioned earlier about the information availability, but in talking to the AIC and how this hopefully will work, we've got the advantages of the close communication with the company and more direct contact. So and the activities of the company being clearer. So those are ways we can get around the issue of not having big, thick, shiny sustainability reports. So okay, that was my final slide. So I hope that gives everyone a flavour of what we are doing. Just a sort of quick overview of the market and how we approach things.
Matthew, thanks ever so much. That was a really nuanced, useful look at some of the intricacies of ethical screening, and it's not actually as easy as it looks. Thank you. I know we're a bit tight for time now. We're at 3 minutes past 11. For any panelists that do need to cut away, and we're expecting to have finished by 11, please do. If, however, you can spare the time, and I know there's a couple of questions that have been coming up into chat, which we will cover for people in the audience, whatever the panelists that are left. But if you do need to cut away, please do. But if you can stay, I'd be very grateful for that. We will take questions at the end into the chat, please. And the reason for that is that we can then capture the chat in the recording. Mark, thank you ever so much for holding on to the end. Over to you, please. Thank you.
That's always a problem being the last panelist, you see. You get the overtime for everyone else. No problem at all. That's fine. I'll try and keep it as super tight as possible, because I know I don't want to be a time thief and take up people's time. I know you've got a lot of questions coming through and they look like great questions. So I'll keep it as tight but as valuable as possible at the same time. So yeah, I'm Mark Brownridge. I'm Director General of the Enterprise Investment Scheme Associations. We're a trade body for the EIS and SDIS industry. I won't tell you too much about it. Go onto the website, have a look at us and see what we do. I won't talk about the tax reliefs either, because as Ali will tell you, tax reliefs are generally pretty dull and boring. And it's just, you probably know what they are anyway, but just to say, it's one of the most tax advantaged investments in the world, 5 tax reliefs in one. That's the incentive you get for an investor to investing in small early stage companies, is you get the tax reliefs and hopefully you can make use of them as an investor. So I'll probably just leave it at that. What I wanted to do was talk about fundraising and what's happening with fundraising at the moment. So I know we've got investors on this call. I know we've got companies and entrepreneurs on the call at the same time. So I wanted to tell you what's kind of happening with fundraising, what's been happening with fundraising with COVID, and hopefully what's looking like a slightly more positive future going forward. So that's pretty much what I want to concentrate on today. So starting point then, so January, February, March, April, obviously when coronavirus hits, we all thought it wasn't going to do much, and then it has this massive effect. And for us, that's a bit of a perfect storm, because those months are also in our world the biggest fundraising months of the year. So there's a bit of an 80-20 rule in EIS, SEIS, VCT world. 80% of all fundraising is done in the last 20% of the year. It's tax year end. It tends to concentrate investors' mind, etc., etc. So for us, it's a massive knock-on effect. And if I share my screen here, you'll see. Let me just go back and do that. Hopefully you can see that. So this graph is showing you kind of what happens for funds, at least. There's 2 sectors within EIS. There's funds who raise money. They raise about approximately half of the £2 billion that's raised through EIS every year, and half is raised through single direct company deals, probably the type of deals that Angel Investors Club have on their platform, quite frankly. In our world, at least, you can see the massive knock-on effect here. So these are funds down the bottom. This is money raised on the side. The blue columns are 2018-19, orange are 2019-20. So you can see in almost every single case, the blue line is bigger than the orange line. Fundraising is really difficult for funds this year. Most of them telling me that fundraisers down anywhere between 60 and 80%. If they're looking to raise 5 million, they raise 3. If they're looking to raise 10, they raise 6. So just had a massive knock-on effect. Obviously, there's a domino effect there, because there's a effect on the companies trying to raise money at the same time. I'll talk about that in a minute. But you'll see at the top here, 2018-19, £448 million raised for EIS. Through funds, again, that's just funds. This year, that's 387 million. So about a 15-20% haircut in the amounts that's being raised. The little box here, it shows you what's happening in crowdfunding as well. Obviously, crowdfunding is a big area for EIS investments. I think 87% of all investments through crowdfunding. So your crowdfund, your crowdcube, your seeders, etc., is done through EIS and SEIS. So January, 4.2 million. Moving on to March, it's about 2.4 million. So a massive knock-on effect on crowdfunding as well. Obviously, we've moved on now. We've had the summer. We're in September now. Summer's always quite months of fundraising anyway, so it's always difficult to raise money for investors. They tend to bog off on holiday. Financial advisors do the same thing as well. So we're only really starting to see that kind of come back a little bit now, going into September as schools go back and people, I was going to say go back to the office, but they're not going back to the office, but start work again at the same time. Angel investors tend to be a bit more sophisticated. Obviously they get this sector slightly more. They have come back slightly earlier. You know, they've seen opportunities, evaluations going down. So they perhaps are investing a little bit more and a little bit earlier than the rest of the industry. The knock-on effect has really been onto companies themselves. As I say, portfolio managers that we speak to, they're having to go back to companies that perhaps they were going to put money into 4 or 5 companies, having to go back to 2 or 3 and say, sorry, you're getting nothing. And the other 2 or 3, sorry, and you're getting half or 20% or 30% of what you were going to get. So that's been the knock-on effect for companies themselves. You can see here the number of deals. February is kind of a normal-ish month, 120 deals. A fair amount of money raised there, but going into March, number of deals has fallen right down to 95 and just £500 million raised. This is across all PE, not just EIS and DCT. So you can see the numbers starting to really knock on and have an effect there, and that's carried on through April and going forward as well. A good leading indicator of companies raising money and being positive is essentially advanced assurance applications. So this is companies applying to get EIS, making sure they fit the criteria, etc., etc. You'll see here again, it really dropped off in March, kind of April time, heading into May, but it has started to climb back up again through July. So the HMRC is starting to get more applications. That hopefully will lead on to more getting EIS or being EIS qualifying, and therefore trying to raise more money. So there are more companies in the sector who are looking for EIS investment. And obviously, at the time valuation's down, it's probably a good time for investors to invest if you have the money to do so. Sector-wise, obviously, it's been a macro, not a micro effect. So this has affected all sectors really. You can see the market itself is down 25% there. I mean, that's bad enough in itself. But you can see most sectors have only just beaten the market, but are down themselves. So this graph's just trying to show you kind of who the winners and losers have been through fundraising over the last few months or so. No surprises down the bottom end. It's jobs, it's retail, real estate, travel, all massively down, unfortunately. Going towards the other end of the scale, again, probably no surprises to you that health has done really well. Streaming services, e-commerce, gaming, food, basically all sat at home, either eating or doing gaming. So those sectors have done really, really well. But it has created winners and losers. And I think that's been the difficult thing of what's happened with coronavirus is you kind of had what normally plays out in 5 or 6 years with companies, whether they're going to be a success or not, has really been condensed into 3 months. We found our losers and we found our winners really quickly. So investors kind of follow the winners, obviously go on that journey. But that doesn't help obviously the losers who, through no fault of their own, this hasn't been bad management or mismanagement or taking the company in the wrong direction. It's just been the kind of the macroeconomic effect of coronavirus. So it's a very kind of uneven playing field at the moment for a lot of companies and a lot of sectors out there. We did some work back in March, look at kind of the effect on SMEs themselves, and just looking at the highlights down here on the left-hand side. So 81% that coronavirus has affected their fundraising a lot or great deal. 44% saying that they're going to raise less than 20% of their fundraising target. So again, if you're looking to raise £100,000, keeping the math simple, you're only going to raise £20,000. That's a massive haircut and an effect on your business. So that probably leads on to the next point, saying that 71% businesses say they won't survive the next 6 months without funding. Again, this is back in March. So hopefully things are looking slightly more positive now in September. But certainly some of those companies who did that survey probably aren't going anymore, unfortunately. Part of the lobbying we were doing was around trying to raise the reliefs of EIS or trying to expand the scheme or improve it in some way, shape or form. And 59% of companies said that would help them in their fundraising efforts. And I guess that goes some way to explain, I just stopped sharing my screen, so that's the last one. That probably goes some way to explain what's happening, what has happened with the government measures that we've seen. So we've kind of seen the 4 horsemen of the apocalypse, I call them. So CBILS, Future Fund, bounce back loans, R&D innovation grants have done a really good job of getting emergency funding into companies, but they're all debt-based. And that's my worry. They're all debt-based. Companies got to pay this money back at some point. The companies we tend to deal with in EIS and SEIS land generally are pre-revenue or kind of early stage profit or don't have any revenue. So debt's no good for them. You can't service debt if you haven't got any revenue. So they need equity funding. They need that type of funding. We reckon there's about 250,000 companies who need equity funding and haven't had anything from any of those schemes. So from our point of view, whilst we didn't get any changes to EIS kind of at the early stages, we're really hopeful now, because the kind of key thing now is resetting the economy. So not just getting companies up and running again, but getting them to grow and to develop and do all the great things that obviously you guys at Angel Investors Club want them to do to help investors get their returns. So it's trying to help those companies. And the number one thing at the moment, talking to ministers the other day, I had a chat with the minister the other day, is jobs. Jobs, jobs, jobs. Any scheme, any idea that creates jobs, they want to hear about, they want to know more about. And that's great news for us, because we know for EIS, having done the research we've done, that for every £1 million that's raised for EIS, it creates 9 jobs. So you can see the multiplier effect there, hopefully quite quickly, as to how that can help. Look at investors going forward. I think, as I say, angel investors have come back slightly earlier than perhaps the rest of the market. So that's great to see that they're kind of leading the charge in that sense. So I think that's probably where it plays into what you guys are doing at Angel Investors Club, to try and corral those investors. Because for my money, and obviously we're trying to change the release to get investors back to the table. Because what happened very quickly was investors hate uncertainty effectively. So you couldn't have a more uncertain time where you're going to invest in an early stage company, which is uncertain anyway, in good times. Obviously in coronavirus times, that's multiplied 20 times. So they've taken risk off the table, they've run for the hills, they put their money under the carpets. And so it's got to find some way to tease them back to the investment table and to make these investments in early stage companies. So I think it's a great opportunity. I think perversely, it's a great time for you guys to be setting up and hopefully getting the business running. I think there's a great opportunities for companies to invest into. And we're seeing some great medical companies, tech companies coming through now. Again, this has accelerated some of those great companies coming through. So at the time for all investors, but for Islamic finance investors particularly, this is an opportunity now to kind of give something back. If you have money, we're hearing all these people that stored up money during lockdown because you can't go out and spend it. So it's a great opportunity to go out and spend that money, help the UK economy, help early stage investors, and just get our gig going back in the UK again. And so I commend the AIC for what you're doing. I really hope it plays out. I think it's a great opportunity and a good starting point to get going.
Mark, thanks ever so much. Some fantastic marketplace intelligence there. Thanks a lot for that. That's awesome to have you on board as well. Cheers. I think what we'll do now, thanks for sticking with us, attendees, is we'll cover some of the questions that have been put into chat. Stella, this one's for you from Roy Zimmerhansel. He says, what are the next steps that are doable in the near future to take Islamic finance forward in the UK?
Thank you, Roy. That's a good question. Look, I could be very expansive in my responses, but I know that the audience here has got specific interests in particular aspects. So I'm going to be quick, but I'm going to cover that sort of broad remit. What do I think they need to do? I think it's very important that we keep government connected, that government agenda stays close to the need to develop further Islamic financial services. That means that certain things have to be done. The inaugural sovereign Islamic bond, or Sukuk, was redeemed. I think that had more to do with everybody in government being focused on Brexit at the time. I would like to see another sovereign Sukuk issuance, because I think that keeps UK Islamic financial services on the global map, and in the vision of potentially significant investors who want to know that the UK is fully open for business, and they will want to invest in a Sharia compliant way. And what I would say is, from my remarks, you'll notice there has been a step change. A lot of the clients that we're working with, they want something that is Sharia compliant and also shows positive impact from the perspective of social and environmental considerations as well. So that's quite important. So in wider strategic policy setting, I hope that the government will have one eye on that, but I think the Sukuk's important. So if we're going down the chain, I mentioned also that it's very important that we as practitioners keep government aware of anything that we think is emerging that could be an issue or prohibitive to that further development. So I'd put a call out to everybody who's tuned in and listening today, that if there is anything that you are doing with your business that is Sharia compliant, that you think there's been a change of legislation, or you think there's something unhelpful from a tax perspective, it's always good to let us know. You can let me know if you want. Ali will give you my details afterwards, and I will filter that through to the City UK, who can lobby government. That's quite important. And then picking up on Mark's words, and I'm sorry, I'm jumping about a bit because I'm trying to get the themes that I think are most relevant to everybody at the moment. There have been a lot of announcements that are COVID-19 relief linked. And what I've been trying to do with colleagues at City UK and with my colleagues at DDCAP is, again, keep an eye on things like Bounce Back and Future Fund. And I completely endorse what Mark is saying about a lot of the startups and the new businesses that we're seeing also in the Sharia compliance space. You know, they're nowhere near the stage of onboarding debt, be it in a Sharia compliance structure that IFAS can advise on or not. But the problem is there are mechanisms around some of those offerings that, if they were able to do that, so think of some of the later stage companies, are not especially Sharia compliant. So we've been trying very hard to keep interested and relevant parties in government up to speed with that, so that they can give feedback to British Business Bank, who's responsible for Future Fund, and where these easing initiatives are being launched and delivered very quickly, we're not falling off, and you know, we're not delivering for one community or set of users and inadvertently excluding others. So in summary, I think education and awareness is all important. Broader picture, we need to keep the UK flag waving. We need to keep our relevance to the global Islamic financial footprint, but we really need to take care of what it is that British business needs in the Sharia compliant, sustainable, responsible space to take that leap forward, because that's where our future is.
Thank you very much, Stella. One for Ali. What about investors and investees outside of the UK? Can you cover that one off for me, please?
Yeah, sure. And particularly for investees, yes, we will be open to them. Of course, if SEIS, EIS is not relevant to them, then there's no question of that. But ideally, we want those schemes incorporated and those, you know, investors to make those or benefit from those wrappers in particular. But yes, for an investee company, ideally, if they want to benefit from SEIS or EIS, then they'll have to have a permanent establishment into the UK and then benefit from those schemes. But ideally, we want companies that are UK based, and investors can be from wherever, really.
Thanks very much. Question for Najib and all panelists. Is further education on Sharia compliance necessary before it can grow further? Najib, if you want to, if I can ask you to kick off on that one, and then.
Yeah, thank you very much. I think, you know, as part of our work as IFAS Group, we have worked so far with, you know, in over 50 jurisdictions, I think 52 jurisdictions. And one of the most common themes is actually lack of awareness. And when I say lack of awareness, I mean at multiple levels, you know, at the, let's call it the macro level, you know, governments, policymakers, at the, you know, the meso level or the market players, financial institutions, industry bodies, and also at the micro level, which is, you know, public in general, Muslims and non-Muslims alike. You know, I think UK was one of the very few countries in the Western world have managed to, you know, deal with this, at least at the, you know, macro level. So, you know, with even changes in governments, you still see that strategy, you know what, we want to support Islamic finance. We see the economic and financial benefits of having Islamic finance as part of our, you know, if you want, global value proposition. We would like to support this. Now, of course, there are a lot of areas of improvement, a lot of areas of, you know, further, you know, if you want development on that side. But, you know, the governments overall needs to understand that Islamic finance is not only about, you know, it's not a religious phenomenon. It's something that can boost your financial inclusion. It's something that can attract foreign direct investments. It's something that can help government. It's a set of tools that helps governments in risk management, in, you know, achieving their national economic development objectives. And also financial institutions need to understand, you know, how can Islamic finance, even, you know, conventional financial institutions, normal business, how can Islamic finance help them in their work? And when you go to the public, that's probably the biggest issue there. So starting with the Muslims, you have, you know, a notion of misconceptions, lack of awareness of how it works. You will find a lot of Muslims who know a lot of things about their religion, but when it comes to, you know, money and financial affairs, their level of awareness is very low. And UK is not an exception. I think one of the banks, Gatehouse Bank, I believe, recently have done a survey, and they have found, as far as I remember, 50% or more of Muslims are not really aware of, you know, the Islamic finance, you know, features or prohibitions. They have never even tried Islamic finance. So awareness is definitely something that is required, even for the non-Muslims. I think Arayan Bank has made a very good case study when they have announced a number of occasions that over 80%, I believe, of their some of their customers in the liability products are non-Muslims. And I think around a third of their customer base are non-Muslims. And that gives you an idea that if you offer a product that has good financial proposition, that stands on its feet as a financial product, it doesn't really have to have that, you know, appeal for, you know, doesn't have to be restricted to Muslims. So yes, you know, awareness is a major issue, and more efforts are required at all levels, you know, from the public to, you know, to institutions and governments to work on.
Thanks, Najib. I think we're 23 minutes over now, so I think we will wrap it up there. There are 3 other questions, but what we'll do is we'll answer those on the website when we put the presentation brochure and the questions up on the website. There are the 3 questions that remain are actually really quite interesting ones anyway, so we will cover them for you on the website. It just remains from Ali and I really to thank absolutely everybody for turning up, both those who have presented today and given of their time for us. Thank you. And for the people that have given their time to come and see what this exciting proposition is. I really do think this is set for success. We have positioned ourselves at exactly the right part of the market that is open to be developed. You know, it will be a hard slog, I don't doubt, but I think we've got everything in place to make it a success. So to everybody, thank you ever so much for coming. We'll close it off there. I'll stop the recording now. If you do want to sort of hang around in as if we were sort of eating canapes and having an orange juice and mingling around after the actual formal presentation, then please do. But that part won't go onto the website. Thanks ever so much for coming. I'll stop that recording there now. Thank you.